The markets are trading slightly lower Monday morning as worries over a Greek exit from the Eurozone were fanned as the new prime minister vows to scale back austerity efforts. Let's talk more about the markets and the implications of a Grexit with Michael James, managing director of equity trading at Wedbush Securities, with us now from Los Angeles. So Michael, it's good to have you on the program. Welcome.
Thank you for the invite.
So is this all talk from Greek Prime Minister Alexis Tsipras, or should investors really be concerned that Greece won't honor its prior financial commitments?
I think it depends on your perspective as an investor. If you're a short-term investor, if you're a trader, yes, I think it just continues what we've seen for the last week, which is significant headline risk. The markets have been moving, 0.5% to 1% just on headlines coming out of Greece. Certainly, it represents a negative headwind to the market. In the bigger scheme of things, as a longer-term investor, I don't think this is anything meaningful. I think when you look back on this 6 months from now, the turmoil coming from Greece will end up being a blip on the radar. But in the short term, yes, it certainly represents most of the commentary coming from Greece is negative, as the conversations and discussions are likely to turn more contentious with Germany and the EU.
All right,
as a result, you're likely to see more of what we've been seeing, which is quick hits to the S&P futures to the downside, kind of a negative overhanging tone to today's market. Longer term, I don't think it's meaningful. Shorter term, yes, it's going to be a headwind for the market to the upside.
But still, it could cause Greece to break away from the Eurozone. And if that happened, how bad would that be for global markets?
I think it might be more of a potential negative for Europe, but in the grand scheme of things, not that big a deal. The problem is, right now, what else do we have to focus on? Yes, we have the jobs number from Friday. Okay, that indicates, well, we must be looking for some kind of a rate hike coming from the Fed. When's that likely to happen? Not till June. What's coming out of Europe? Nothing meaningful. The only thing that's causing headlines is what's going on with Greece. All those headlines are negative. So everyone's focus is on what's readily available, which is the contentious dialogue and commentary. So there's not much else to focus on for Europe in terms of meaningful news, economic headlines. What there is to focus on is Greece, and that's negative. Bigger picture, to me, no, not that big a concern, but it's likely to keep us in what we have been for the year, which is a trading range. S&P roughly 2,000 on the lower end, S&P 2075 on the upper end, which is where we got to on Friday. You look at what we've seen this year, the S&P has moved 1% every day this year. That's pretty big volatility. But where are we for the year? After 6 weeks, we're nowhere. So I think what you're likely to see is continued volatility without really going anywhere meaningfully one way or the other.
Let's talk about that.
As the year progresses.
Let's talk about that. Moving back to the U.S., I mean, like you mentioned, so far in 2015, there's been a lot of volatility. We've seen over a dozen triple-digit moves in the Dow. I mean, do you expect this to continue? Give us your brief markets outlook for the coming months.
I do. I think look at Q4 earnings reports that we've seen for the last couple of weeks. Some pretty good, some not so great. The one main theme has been significant FX headwind as we've had a much stronger dollar, much weaker euro.
Michael James, Managing Director of Equity Trading at Wedbush Securities. Thanks so much for joining us.
Thanks for the time.
I'm Scott Gamm, and you're watching The Street.